I'm Jessica Pavogel. I manage the TurnKey programs here at Federal Home Loan Bank Topeka, and I have Kristen Combs with me. She coordinates the TurnKey programs. Today we're going to talk about challenges that members faced during the 2025 rounds and how to prevent those errors and have error-free participation. We have several slides to go over today, so we're not going to stop for questions during the webinar, so we can try to get through all the slides. If we can get to the questions at the end of the webinar, we will. And if we can't get to them, we ask that you please email our TurnKey inbox with your questions, and we'll answer those through email if we're unable to get to them. First, we want to talk about authorized users. The authorized users are the individuals who have access to HSP Online and submit the reservations to us, reservations and disbursements. They're designated by your institution, and they really manage the programs for your institution. They're responsible for interviewing the household, certifying eligibility, and we recommend that you limit authorized users to 2 to 3 individuals for TurnKey. They could be the subject matter experts and have the capacity to really manage the programs. If you have questions about the authorized users' responsibilities, we do have those resources listed at the bottom of the page there, page 8 and 10 of the user guides. And then we also have a document that is dedicated to authorized users. It's called the Authorized Users in HSP Online, and that document is in the resources section of the TurnKey website. Just a second here. People are saying that there's an echo. Oh, no. But others are saying there isn't. Okay, so we'll keep going. I would suggest if you're having an echo, if there's other people in the room, maybe with laptops or something, that could be the issue. But I'm not an IT expert, that's for sure. So, okay. So moving on. So here's an overall snapshot of the 2025 TurnKey round. Our analysts reviewed over 2,000 reservations. 294 were deemed ineligible, which represents a little over 11% of all submissions. Among the 294 of ineligible reservations, 86 of them had 2 or more issues, and 20 of those had 3 or more issues. When we reviewed the 294 reservations, one major factor stood out. More than 84% of the reservations deemed ineligible were due to income documentation issues. Some examples of those issues are income documentation for a specific household or income documentation not being provided at all, or the wrong income documentation was provided, or the ICW was not completed with the income documentation that was provided. But the encouraging part is that all of these areas are just small process adjustments that can be made, and that'll make a big impact. So our goal in sharing this isn't to point out mistakes, it's to highlight where we can help you streamline your process and reduce the rework to increase approvals for the next round. We want your reservations to succeed, and understanding these patterns helps us support you better. So here's a breakdown of those ineligible reservations. And then this is just really the same information that lists out the reason for the ineligible reservations. We spent a lot of time reviewing them, digging into the patterns behind it, and our goal was to understand where the process was breaking down and how we can better support you. From that review, we identified several areas where targeted training can make a meaningful difference and help improve the reservation submissions moving forward. So I'm going to pass it over to Kristen, who is going to go over some of the issues and give you guys solutions and resources to help improve those submissions.
So one of the biggest challenges we saw was incorrect or missing income documentation was causing the reservations to be deemed ineligible. So that's the first challenge we want to walk through with you. The first situation we often see is when no income documents are provided. So when you're gathering the documentation for a reservation, it's important to make sure that all of your income documents for all household members are combined into one PDF, and you're uploading that one PDF to the household income screen in HSP Online. If income is entered in the ICW, but the supporting documentation isn't uploaded, the reservation will be deemed ineligible. Next, we have the opposite issue. Income documents were provided, but the income figures were not entered into the ICW, or the numbers that were entered into the ICW don't match what's shown on the income documentation. Every entry in the ICW must be verified against the income documentation provided. When the two don't align, we can't confirm eligibility and the reservation will be deemed ineligible. Next, we have where for households with hourly or salary wage earners, we only need one pay stub or a VOE. The key is that the pay stub should accurately reflect a typical pay period for the household member. For example, if the household member typically works 32 hours a week, please provide a pay stub that shows their regular 32-hour schedule. If their most recent pay stub shows 40 hours a week, but that's not their usual schedule, it's perfectly fine to use an earlier pay stub that reflects their typical hours. The pay stub and VOE do have to be dated within 60 days of the reservation submission, but you don't necessarily have to provide the most recent pay stub if that does not accurately represent their normal pay. Another common challenge we saw was that the ICW or income documentation being uploaded were for the wrong household. This is an easy mistake to make, especially when working through multiple files quickly. When you upload documents to HSP Online, take a moment to double check that you have the correct ICW and income documents for the household shown on the reservation initiation screen. One best practice that can really help is to download a fresh ICW from the resources section of the TurnKey public website for each household. Reusing ICWs can lead to leftover information from a previous household accidentally being included, which will result in the reservation being deemed ineligible. We recommend saving the TurnKey public website as a favorite and visiting it each time you need an ICW, a zero income cert, a RERA, or any other of our forms. This ensures you're always working with the most current version and reduces the chance of errors. Here, we see when household members are switching jobs or preparing to start a new job. This can definitely get confusing trying to figure out which income documents to provide. The key thing to remember is that TurnKey determines eligibility based on the household situation at the time of reservation. If the homebuyer is currently unemployed but has signed an employment contract with a confirmed future start date, then the correct documentation to provide is that fully executed employment contract with the confirmed future start date. On the other hand, if the homebuyer is currently employed, then we need the documentation that reflects their current employment, even if they're planning to start a new job soon. Future income is typically not considered when determining household eligibility. We have to base our review on the income that is active at the time the reservation is being submitted.
Now we'll take a look at self-employment income documentation. These next two slides focus on some of the most common challenges. Self-employment can be a little more complex, so we want to make sure you feel confident in what you submit. First, the tax return must be signed by all individuals listed on the 1040. Several reservations were deemed ineligible for this small error in 2025. Also, all documentation needs to meet FHLBank's income documentation guidelines. This is one area where small details really matter. Whenever you're working with a household that includes a self-employed individual, it's incredibly helpful to review page 17 of the AHP TurnKey Income Calculation Guide. That page walks through exactly what's required and how to determine the correct income. One of the biggest challenges we see in regards to self-employment income is incomplete documentation. If you're providing a tax return, remember that all pages and schedules of the signed tax return must be included when you upload the income documentation on the household income screen. If the previous year's tax return is not yet filed or the self-employment started in the current year, then the AHP TurnKey profit and loss form must be completed and signed by the household member. We do not accept alternative P&L forms.
Now we're going to look at ICW discrepancy errors. The ICW calculates employment income in two ways: year-to-date annualized income and annualized base wages. If after completing the income calculation in the ICW, there is a discrepancy of the greater of 7% or $3,000 or more, a red font warning message under the highest calculated income will appear in the ICW. All discrepancies must be fully explained by the employer. Do not submit the ICW if it includes a discrepancy without also providing an employer explanation that can cure the discrepancy. The employer explanation should be able to be tested and cure the discrepancy error. This screen shows the red font warning message when there is an income calculation discrepancy. If your ICW is showing the income calculation discrepancy error, double-check the figures entered for errors, and then you can find details about common errors on page 25 of the AHP TurnKey Income Calculation Guide.
The pay frequency must be able to be determined in order to accurately enter the income figures in the ICW. If the pay frequency or the pay period start date and end dates are not shown on the pay stub, you will need to verify the pay frequency with the employer prior to submitting the reservation. We also need a breakdown of all year-to-date earnings along with the total year-to-date amount. If the pay stub does not include a breakdown, then a VOE may be required. If a VOE can't be attained, it may be necessary to provide all year-to-date pay stubs instead. If you do need to submit all year-to-date pay stubs, make a note in the ICW explaining why you're providing them.
For hourly and salary wage earners, the pay stub or the VOE must be dated within 60 days prior to the reservation submission date and must include at least 28 days of year-to-date earnings. These two guidelines are defined in the income calculation guide to ensure and should be reviewed to ensure all submitted income documentation meets TurnKey requirements. Here we're going to talk about non-employment income documentation. For Social Security and SSI, all pages of the current benefit letter for the current benefit year must be provided. Benefit letters are typically provided to recipients annually in December. So the benefit letter the homebuyer received in December of 2025 explains the 2026 benefits. Do not provide bank statements showing the benefit deposit. For child support or alimony, either the most recent signed and executed court order or a statement from the state agency is required. If the household is not receiving the income regularly, then you can provide the most recent previous 6 months history. Again, do not provide bank statements showing the child support or alimony deposits.
If a household member is 18 years of age or older and is not employed or receiving income of any kind, they must complete and sign an HP TurnKey Zero Income Certification. The most recent form is available on the TurnKey public website in the resources section. Please do not save the form on your desktop. Instead, obtain a new Zero Income Certification form from the resources section of the TurnKey public website for each non-income earning household member. When you complete the workbook and you enter the date of birth, the age will populate. If the household member is age 18 or older and you answer no to the income earner question, a red font message will pop up at the bottom of the household composition, reminding you that a zero income certification is needed for that household member. And that documentation should be uploaded with the other income documentation on the household income screen.
Obtain a new TurnKey ICW from the resources section of the TurnKey public website for each household. Do not obtain ICWs from the previous rounds in HSP Online or use the ICW from the IHP public website. The TurnKey ICW is labeled TurnKey Programs on the Household Summary tab of the ICW. Here you can see up at the top where it says TurnKey Programs.
For seasonal income, the seasonal nature of employment must be verified with the employer, as well as the number of weeks worked per year and the number of weeks worked year to date. Regardless of the type of income documentation being provided, seasonal employment always requires verification from the employer. The verification can be obtained verbally and noted in the ICW, but we prefer the information be obtained in writing. This typically ensures the information is accurate and requires less follow-up. I will add that if you've looked at the most recent version of the ICW, we did add another seasonal section. We were running into homebuyers had multiple seasonal employments, and so there is more than one seasonal employment now in case they have more than one source of seasonal employment.
Here, we'll talk about excessive income documentation. It's very important that you only provide the required income documentation listed in the AHP Turnkey Income Calculation Guide. Providing excessive and unnecessary income documentation slows down the review process and will likely result in the reservation being deemed ineligible or requiring several rounds of clarification.
It's important when completing the ICW Household Summary tab, you're including all household members. This includes all borrowing adults, non-borrowing adults, minor and non-minor children. All household members must be disclosed in the ICW and their income at the time of reservation submission. This is separate from the loan guidelines. So even if someone, if you're not using their income for the loan, it still has to be disclosed for the grant. Here's some examples of ways you can determine by looking at income documentation if there may be other household members. Example 1, the deduction section of the pay stub shows child life and child support. If the household didn't disclose children to you, but if the pay stub shows these type of deductions, this is something that our analysts are going to see on the pay stub, and they're going to ask you about in a clarification request. In scenario 2, the tax filing status shows the pay stub, it shows married or an M. And so our analyst, if the reservation was submitted as one-person household, our analyst is going to see this on a pay stub and send clarification to ask why the pay stub is showing that the household member is married. There could be a reasonable explanation that they have recently got divorced and haven't updated this information with their employer yet. But regardless, we have to ask since the grant is based on household income. Example 3, the deductions section shows family insurance. So if, again, if the reservation was submitted as a one-person household, then the analyst is going to ask about this deduction for family insurance, expecting that there would be other household members in the household. Again, it is the authorized user's responsibility to interview the household, ask them who will be living in the house, and get all the income for the household. That the household doesn't know what you need for the reservation, and so it's important that you ask all the right questions because they're not going to know what to tell you.
For the reservations that were deemed ineligible because the household income exceeded the AMI guideline, we took a closer look at what was happening in the workbook. We wanted to understand exactly where things were going off track. On the next few slides, we're going to walk through the most common challenges our members faced, and more importantly, how to avoid those challenges in the 2026 round. Our goal is to help members complete the ICW accurately so they can identify when a household is ineligible before submitting a reservation. This saves time, reduces rework, and ensures your efforts are focused on households that qualify. Some tips are making sure that all entries in the ICW are verified with the documentation you are providing. Only complete the ICW with the documentation that you are providing. Utilize the AHP TurnKey income calculation guide. Our analysts review it every single time they're reviewing a reservation, and we hope that you guys are reviewing it every single time you're reviewing and entering income in the ICW. Provide a pay stub that accurately represents a typical pay period. If they typically work 40 hours a week, don't provide us one that only shows 28 hours. And if you have questions about income, email them to the TurnKey email. However, do not email ICWs or income documentation. Email is not secure. So if you're going to be emailing us, you can use screenshots. You can, ask us where to find the information in the guide, then we can point you there. But it's very important that you're not sending PII through email. This is just a breakdown of the errors seen that resulted in the household being deemed ineligible for being over income.
So the most common error that we've seen when the workbook is submitted is that the hours per week are not completed correctly. We do have resources in our income calculation guide. Pages 12 and 13 provide definitions and examples of common pay frequencies. So biweekly is every 2 weeks, semi-monthly twice per month, monthly once per month, etc. The hours per week should be entered in the ICW based on the income documentation provided. One tip that we can provide is that biweekly pay periods are always going to be 14 days. If the pay period includes any number of days other than 14, it's not biweekly. So when entering the hours per week in the ICW, it shouldn't be just an automatic that you divide them by 2 and complete the ICW with that figure. If you see the number of days in the pay period, anything besides 14, such as 12, 13, 15, 16, whatever, it's typically semi-monthly, which requires a different calculation. And on page 13 of the income calculation guide, we have how to calculate hours per week based off the pay frequency. So we recommend that you use the guide and use those examples to help you with calculating the hours per week. Here we have an example. As you can see, I know it's kind of looks like a mess on the screen, but the PTO and regular pay, those are considered regular hours per week. The PTO supplements regular pay. So the total regular hours per week are 80.6. This one happens to be biweekly, so you would divide by 2. So the hours per week should be completed as 40.3. They shouldn't be entered as 36.3 because we do have to include the PTO. So you wouldn't just take the regular pay and divide by 2. And it shouldn't be entered as 40 because we are including the PTO. So when you take the 8 hours of PTO plus the 72.6 of regular pay and divide by 2, you get the 40.3. So if they regularly work 40 hours per week and you want to complete the workbook as 40 hours, then a pay stub showing 40 hours is what should be provided to us.
Year-to-date other income not being completed correctly is another common error that we saw. So when you're completing the year-to-date other income, you should be using earnings paid in addition to regular earnings, such as overtime, tips, commissions, bonuses, shift differential, per diem, and other non-regular wages. So these you wouldn't be including holiday, sick, vacation, or bereavement pay because those are paid in lieu of regular earnings. One tip is that the year-to-date other income is part of the base wages calculation. So when you're entering year-to-date other income and you're including those earnings in the year-to-date total income. It's not double counting it. It's not overstating the income. There is 2 separate calculations in the workbook, and the workbook is only taking the higher of the 2 calculations. Here you can see where Overtime is the only income paid in addition to regular earnings. So you should be entering the $1,520.35 in the year-to-date other income. All other pay earnings there are paid at the regular rates. And so then you would be entering the full year-to-date total, the $12,220.52, into the year-to-date total income section. When you're comparing the year-to-date earnings amount and then the base wages plus the year-to-date other income annualized amount, the higher value is going to be taken for the income calculation. It's not doubling it. Again, here we're talking about year-to-date total income. So making sure that you're entering all earnings into that year-to-date total income field. We're not excluding any earnings from that total. You can refer to page 11 of the income calculation guide for detailed instructions on this.
Another common error we saw when completing the ICW was either the year-to-date start date or pay period end date were not completed correctly. On the pay period end date, it needs to be completed per the income document provided. So a tip we can provide is that do not complete the pay period end date with the actual pay date. It should be the pay period end date. If you complete it with the pay date, it's going to drag out those earnings and make the income look less. And so that's why if you submit it with the pay period end date completed as the pay date, then the income is going to look less than it really is because it's annualized it over a longer period of time. And so it's possible you could submit it to us that way. Once we enter the pay period end date, the household could be over income because we've now shortened how long those earnings are annualized. Many of the VOEs that are provided to us don't have a pay period end date, so we do prefer a pay stub. The year-to-date start date is the pay period start date for the first paycheck of the year. So typically, this is a date in the prior year, and it's typically not January 1st of the current year, but it can be a lot of times with semi-monthly pay periods, it is January 1st, but most of the time it's a date in December of the prior year. You can back into the year-to-date start date using the pay period start date, pay period end date, and pay date on a pay stub. So this is an example. This home buyer was paid biweekly, and the pay periods run Saturday to Sunday. So those green boxes marked in January, they were paid from January 11th to January 24th. That was the pay period, and they were paid on the 30th, Friday, the following Friday. So that was the pay stub that we were looking at. So if you take those dates, we can back into and find out when the year-to-date start date was. So the way that we do it and the way we train people to do it is first, we're going to look for the first pay date of 2026. So we are going to count back every other Friday to the first pay date. So we know the pay stub we have shows January 30th was the pay date. So we go back to the 16th was the one prior to that and go back to the 2nd. So we know January 2nd was the first pay date of 2026. And we know that the pay periods end the Saturday prior. So if we go to the Saturday prior, that was December 27th. And we know the pay periods are 2 weeks long, starting on Mondays. And so we go back to that Monday, which would have been December 14th. So in this case, backing into the year-to-date start date, the year-to-date start date would be December 14th, and we would complete the year-to-date start date in the ICW is December 14th. The reason for that is because the year-to-date earnings, the total year-to-date earnings showing on that January 30th pay stub includes earnings from December 14th to January 30th. If you put a date, if you put like January 1st as the year-to-date start date in the workbook, one, you're going to be overstating the earnings because it's annualizing the earnings over a shorter period of time. And you're most likely going to have a discrepancy in the workbook because you're overstating those earnings by a couple weeks. And then these are just some miscellaneous errors that we see. The Social Security income should be completed with the growth benefit. We need all pages of the Social Security letter. This is why we don't accept bank statements, because they don't show the gross benefit. Please make sure the documentation is legible. A lot of times we get, especially with the benefit letters, letters that are not legible. And so we can't get the review started when we can't read the documentation. Make sure the regular hourly rate field is completed with the rate shown on the income documentation. And if the income documentation doesn't have a regular hourly rate on it, it has to be verified in writing with the employer. And that verification has to be uploaded in HSP Online with the employer or with the other income docs. Always refer to the AHP Turnkey Income Calculation Guide for documentation and calculation requirements. We do not utilize Fannie and Freddie income guidelines. They're different than ours. Qualifying for a loan is different than qualifying for a grant. It has a different purpose. And so, therefore, our income calculation guidelines are different. Always select the state and county on the household summary tab of the ICW. This allows the AMI percent to calculate. And if the household is over income, a message will populate on the workbook that will tell you that the household's over income. But if you don't select the state and county, the AMI percent won't calculate, so that message won't populate and let you know.
Here are a few important guideline reminders that can help keep your reservations on track. Non-housing debt payoffs as part of the home purchase are not allowed. Even if the home buyer or another party is contributing funds. If a non-housing payoff appears on the CD, the amount paid toward that debt will be deducted from your HSP subsidy reimbursement. Next, home buyers may not receive more than $250 in cash back before, during, or after closing. If while preparing the CD you notice that the home buyer will receive more than $250, there are a few easy ways to correct it. You can apply a principal reduction payment and show it on the CD, reduce the amount of the AHP subsidy, or reduce the amount of other sources going into the transaction. For the HOPE grant, remember that the loan-to-value ratio must be at least 80%. This is reviewed at reservation and disbursement. For HSP and HSP Plus, for HSP and HOPE, the front ratio may not exceed 38%. And for HSP Plus, the limit is 44%. These are also reviewed at reservation and disbursement. Households receiving HSP and HSP Plus subsidy must meet Federal Home Loan Bank's first-time homebuyer definition. You can review the definition in the HSP and HSP Plus user guide. And finally, one of the most important reminders is to keep your loan guidelines and the TurnKey guidelines separate. They don't override one another, and following both sets of requirements helps ensure a smooth review and approval process.
Here we just want to provide some helpful guidance. These are common questions that we get. Look up the zip and +4 prior to the day of submission. This will save you some time in case the +4, in case you can't find it. We suggest that you start with USPS.com. If you can't find it there, you can try UnitedStatesZipCodes.org. Of course, if you can't find it there, you can email the TurnKey inbox and we'll research it for you. We provide this guidance in both user guides. There's also help text on the site selection screen providing this information. After a disbursement request has been initiated, the disbursement screens cannot be accessed from the reservation home screen. So if you want to continue working on the disbursement, you have to select the disbursement number from the dashboard. So as soon as you initiate that disbursement, it automatically assigns a disbursement number. So the only way to get back to that disbursement is to select that disbursement number on the dashboard. You can't go back into the reservation and try to initiate another disbursement. HSP Online will only let you initiate one disbursement per reservation. Know the HSP Online statuses and review the automated emails. We do have the status definitions in both user guides. Those will help you know where you are at in the reservation disbursement process. Also, just a tip, anytime the status has the word pending, it means that we are waiting on you to complete something. So we cannot review a reservation or disbursement if the status has the word pending. Pending means that we're waiting on you to complete a clarification request and submit it back to us. Please adhere to the 30-day turn time, and we do not expedite processing of reservation and disbursement requests. Use only the TurnKey guides, income limits, forms, documents. Please don't rely on Fannie Mae and Freddie Mac or other external program and loan guidelines because they're very different from TurnKey guidelines. Here we've just listed out the TurnKey resources and forums that are available on our public website. Again, like Kristen had mentioned earlier, we suggest that you do save that website as a favorite and visit it often. We did put some of those forms like the real estate retention agreement. The revision date is 2/1/25. That's the most recent form. It's the same agreement we used for the 2025 TurnKey. And then the HP TurnKey profit and loss statement that was revised in January 2026. So that will be the form that needs to be used for the 26 TurnKey. And the TurnKey ICW was revised on February 1st of 26. So that will be the ICW that must be used for the 26 round. I will mention, it was stated on a slide earlier, but please do not go into HSP Online right now and try to get an ICW because you only have access to prior rounds. And the prior rounds only have the prior workbooks. So if you're grabbing an ICW from a 2025 round, that's going to be an outdated workbook. So please make sure that you're going to our website and getting the workbook from the website. So training, we do have a podcast that focuses on the restructure of hope. Lance Leiby, our Senior Vice President and Chief Business Officer, and Kylie Mergen, First Vice President, CIO and director of HCD. They discussed the restructure of Hope. That podcast will be released soon. We do have HSP and HSP Plus training videos that focus on the main eligibility guidelines. They will hopefully be posted on our website soon, and we'll send out an email when those are ready. And then we also just want to let you know to watch for opportunities for other HCD programs so you can participate in them. We've put those there on the slide with the opening dates for those programs. Some of those are included in the Hope scoring structure, and so there is an opportunity to receive Hope points for participating in some of those programs. And then here is our email address and our 1-800 or toll-free number for questions. It looks like we have about 10 minutes left, so we're going to look in the chat and try to answer some questions that came through. Okay, it looks like it says, if there's a discrepancy with income on the ICW and the employer will not help with a VOE, are we allowed to upload all pay stubs year-to-date to help explain the discrepancy? I would say first, look in that income calculation guide, because there's a whole section dedicated to discrepancies, and make sure that you have eliminated all of those different reasons in the guide to make sure that those aren't the reasons for the discrepancy. But yeah, after that, if the employer is unwilling to help, and I know that we know that a lot of those big companies, you know, will not speak with you. We understand that. So if that's the case, then, and the VOE is not helping, then yes, then you can just make a note in the ICW that, you know, you were unable to get any help from the employer, and that's why all pay stubs year-to-date were submitted. And if you have questions about specific pay stubs or households, please email those to us so we can go over those with you. We won't be answering those in the webinar today.
One question here is, if a child is under age 18 and working, does that income have to be included? And the answer is no. If they are under age 18, then we do not count their income. One caveat to that is if the parent is receiving Social Security income on the child's behalf, then that does get counted, that because it's the parent is receiving it themselves, and so that is income that we do include. But if a 16-year-old has a job at the grocery store, then that income is not counted.
Okay, we have a question about, is noted that the front ratio is reviewed at disbursement. What happens when there is a non-borrowing spouse whose income is included on the ICW and brings the front ratio below 38, but they are not on the loan? What happens if the front ratio is above 38 for the lender side of things? Like we said earlier, the loan and the grant guidelines are separate, and so the grant is based on household income, and so we just need the front ratio to be 38 or below for the grant. For the HOPE grant, sorry, it says, when does the due month begin? if we max our number of applications in a month. We're increasing the limit on the third Monday of each month. There is a chart in the HOPE user guide. It's towards the beginning that goes over the member monthly limit, and it has the dates and when it will be increased. I'm sorry, I can't tell you the page right now because I don't have it in front of me. But if you look in the HOPE user guide, it does explain and give you the dates of when the member monthly limit will be increased.
There's a question, will there be a real estate retention agreement for the land lease properties? And yes, there is. It's currently the same one that was used last year. So if you need to get another copy of it, you can email the TurnKey email inbox and we'll get that to you. Also, the slides will all be available. The webinar and the slides will all be posted to the TurnKey website within the next week.
There's a question, is there a max on a principal reduction if the cash back exceeds $250? There is no max, but we do ask that you keep the principal reductions to a minimum. The regulation states that the grant should be used for down payment and closing cost assistance. And so the principal reduction should be kept to a minimum. If it's going to be, turns out to be a large principal reduction, then the transaction should be, you should take a look at the transaction and try to restructure it as down payment or closing cost assistance. There's a question, how do you calculate an annual bonus paid in January with no possible bonuses for the rest of the year? We do have guidance for that in our income calculation guide. You have to get verification from the employer in writing that it's a one-time bonus and that the household will not receive any other bonuses for the remainder of the year. And then that amount of the bonus can be removed from the year-to-date total income and the year-to-date other income and shown as a one-time earning in Section 4 of the ICW.
There's a question about self-employed bar that has not filed their 2025 tax return, but they had self-employment in 2025. So you would complete the AHP P&L for that 2025 year. So yes, that you would do nothing for the 2026 if they were employed in 2025 or self-employed in 2025.
Also, we do have a self-employment decision tree in the resources section of the TurnKey public website to help you figure out what documentation is needed for self-employment that a lot of members have told us they find really helpful. So if you're ever struggling to figure out what's needed for self-employment, that decision tree, it's in resources and then under income, it can be very helpful.
Someone asked if the ICW is the correct one on the website. So, and yes, that is. So on the TurnKey website, the ICW that is currently uploaded there is the February 1st, 2026 version, and that is the most recent version. You do not want to pull it from previous rounds in HSP Online because that's going to be the old version.
Someone asked what time will the application process open on March 2nd. HSP Online is available to members at 6:30 a.m. So on those first two opening days, March 2nd and March 16th, the applications are available at 6:30 a.m. Moving on from there, when we do the monthly member increases, those increases are made by 9 a.m. On those days. So it will not be 6:30 a.m. when we do the member monthly increases. It will be by 9 a.m. And we are right at 11 o'clock. So if we did not get to your question, we ask that you please email that TurnKey inbox so we can respond to your question. Thank you for joining us today. We're blown away by the amount of registrants we had. We had over 500 people register for this, and we've been told that that is a record for Federal Home Loan Bank on a webinar. So that's amazing that so many people were interested in joining us today. So we thank you for that and are excited to get started next week on our TurnKey program. So thank you for joining us today.